Good morning, students. We are on chapter number 6 of account part 2, conventions, assumptions, concept and principles of accounting. Today in this lecture we are going to talk about accrual concept. Friends, we know that there are two systems of accounting, cash system and accrual system. That is, accounts are prepared sometimes on cash basis or sometimes accrual basis. Accrual concept says that cost or revenue are accrued, that is recognized as they are earned or incurred, and not only when cash is received or paid. So any cost, or that is expense, or any income or revenue will be accrued or recognized when it is earned, irrespective it is received or not. Say for example, the salary of March month you are paying in April, but as it is a salary of service of month of March, it will be considered an expenditure or expense of month of March, not of April. You are selling goods to a customer on credit, there also amount is not received, but it is considered as revenue, it is considered as sales, because the amount is legally due to be received from the customer, and that customer will be known as debtor. Okay, the same way, according to this concept only, if suppose there is any advance received for sale of goods, it will not be recorded in sales, as the goods is not been sold. It will be recorded in sales only when the goods will be supplied to the customer or to the debtor or to the person who has ordered the goods against this advance. Okay, so basically accrual concept is about the recognition of the expense or income, or that is revenue, when it incurred, irrespective it is received or paid in cash or not. This concept is relevant in the area of revenue and cost. Revenue or cost are accrued, that is recognized as they are earned or incurred, and not only when cash is received or paid. Also, the revenue and cost will be recognized in the period to which they relate. This concept implies that revenue should be recognized and recorded in the accounting as and when it is earned or it accrues, irrespective of the time or period of receipt. Similarly, expenses should be recognized and recorded in accounting as and when it is incurred, irrespective of the period of payment thereof. There are two system of accounting: cash basis, accrual basis. In cash basis, the revenue is recognized only when cash is received, and expenses or costs are recognized only when cash is actually paid. Only some professionals like doctors, lawyers, chartered accountant follow cash system of accounting. For companies, it is mandatory to follow accrual system of accounting. Most of the enterprises follow accrual system, in which revenue or cost are recognized as they are earned or incurred, irrespective of whether cash is received or not. The caste system is discussed here only for academic interest and for better understanding of the concept of accrual. In absence of any contrary information, it may be assumed that the accounts are maintained by the accrual system. The concept of accrual of revenue is similar to the concept of realization of revenue or revenue recognition. It guides about the point in time when revenue should be recognized or when revenue should be treated as realized. However, accrual concept deals with the accrual of not only revenue but also that of costs. The following illustrations and discussion will help in understanding this concept. When goods are sold on credit to a customer, the revenue should be recognized in accounting when such goods are sold, even though cash is not received yet for such sale. The logic in recognizing revenue in this case is that the person to whom goods are sold has legally become liable to pay the value of goods as agreed. Hence, this money will come at a future date. The amount that will be recognized as revenue is reasonably certain to be realized. Therefore, the revenue from the sale of goods will be recognized as and when the event of sale of goods has occurred. Thus, accrual concept requires treating revenue as accrued when goods are sold irrespective of the period when cash is received. Salary payable for March 2016 will be treated as expenses for the month of March 2016 even if it is paid in April 2016, because the benefit of service of employee is taken in the month of March based on accrual concept. Since the salary expense is incurred for March 2016, it will be recorded in the period to which it relates. And the last one is, even though cash is received advance received against sale of goods is not recorded as sales until the goods are supplied against the advances. This is because of accrual concept, according to which revenue should be recognized and recorded in the accounting as and when it is earned or it occurs, irrespective of fact whether cash is received or not. Even if advance is received, as the goods are not supplied against this advance, revenue cannot be said to accrue. Hence, based on accrual concept, revenue will not be recognized when advance is received because the goods are yet to be supplied. The International Accounting Standard Committee, that is IASC, and the Institute of Chartered Accountant of India treats the following three concepts as fundamental accounting concepts. Friends, so far we have studied three concepts: going concern concept, consistency concept, and accrual concept. These three concepts are considered as fundamental accounting concept by IASC and ICAI. Right? So this was about accrual concept. In next lecture we will be doing accounting entity concept. Thank you.